Well, let me start with a very clear warning. If you reported false information on a tax return, and that return happens to come under federal or state audit, this is not a routine audit problem. Once fraud enters the picture, the IRS and most state taxing authorities stop treating your case as a compliance issue, and they start evaluating your criminal intent. And criminal intent is what turns civil tax problems into criminal tax exposure. There's a huge difference between a mistake and intentionally filing a return that you knew was false. When you sign a tax return, you do so under penalties of perjury. If the IRS or a state taxing authority believes information was deliberately false, that single act can change how many previous years they can audit and whether federal or state criminal investigators get involved. Also, you got to look at what this does to the statute of limitation. Most taxpayers think the IRS and most states only have 3 years to act. That is not true when fraud is alleged. If the IRS claims you filed a fraudulent return with intent to evade tax, they can assess additional tax at any time in the future. There is no statute of limitations shield once fraud is on the table. Even if they just hit you with civil penalties, civil exposure can escalate fast. Accuracy-related penalties can add 20% to the assessed tax. If the IRS asserts civil fraud, the penalty jumps to 75% of the additional tax, any portion that's attributable to fraud. That's before interest, that's before expanded audits, and that's before criminal risk is even addressed. If they have the evidence for the penalty, they have the evidence to criminally prosecute. If the government believes your conduct was willful, criminal charges become possible. Signing a return that you knew was false can expose you to felony charges, fines, incarceration, and loss of professional licensing. Federal law gives the government up to 6 years to bring as many criminal charges as possible within a 6-year period of time. And if state filings are involved, state-level exposure can stack on top of federal risk. The biggest mistake taxpayers make at this stage is trying to explain themselves or apologizing. Don't call the IRS directly. Don't go back to the original preparer that cooked that return for you. Don't file amended returns without legal counsel. These actions can create criminal tax admissions. They harden the government's intent narrative. Once that record exists, you can't take it back. So what's the corrective strategy? Whatever you do, don't improvise. Correcting false reporting requires strategy. Timing matters. The narrative matters. And attorney-client privilege and work product privilege matter. In some cases, voluntary disclosure may be appropriate, but it must be done correctly and before the IRS or a state contacts you or receives information from third parties. And even then, disclosure does not guarantee immunity. This is why high-risk tax matters should be handled by a dual-licensed tax attorney and CPA such as myself. You need someone who understands both the civil audit defense strategies and criminal tax exposure. Someone who can control communications, protect privilege, and prevent corrections from becoming criminal admissions or confession. If you believe you reported false information, you concealed income, or crossed the line from mistakes to willful conduct, you need to act carefully and immediately. Call the tax law offices of David W. Clausing at 800-681-1295 or visit the contact page of our website at clausing-associates.com to schedule a confidential, reduced rate initial consultation today. Because once your tax fraud is at risk of discovery, every move you make matters. Thank you.